Hey everybody, welcome to Forex Trading Analysis for Synergy FX. It is 11:55 p.m. on Tuesday the 19th, and today we're going to be looking at three pairs, but quick risk disclaimer before we get started. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investments. Don't invest money you can't afford to lose. Seek advice by an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So, the first pair I want to take a look at today is a US dollar pair, based mostly on the fact that we do have FOMC rates coming out tomorrow. At 12:30, FOMC statement's going to start rolling in, and around 2 o'clock and into 2:15, we're going to start to get some projections as the press conference goes on. So it's going to be an interesting day overall. Should get a lot of orders, even though there's not expected to be a whole lot of change in the marketplace. Fed said in the end of 2011 that they weren't going to change rates until at least 2014. So considering it's only 2012, I wouldn't put it past. I wouldn't expect them to deviate from that. Possibly end of 2013, they may change their opinion, but for now, I do believe that the Fed will continue to implement whatever strategy they are looking to implement, and they will keep rates low for now. So, based on that fact, I do believe that we will see some pretty large moves, but nothing too substantial. And I do think that there are going to be some nice profit targets that we're going to be able to see in the next few days. So one thing I do like about the US dollar right now is that it is at a point where risks are pretty low to the downside because we are just below the 100-hour moving average and not too far from the 200-hour moving average. RSI is currently right in the middle, so we could sort of go either way. So no trades right now from the US dollar, Norwegian krona, but if we do start to see a push back up towards possibly a sixth level, then we do have an area of resistance at around 6, and also we will be through the two moving averages. So like I said, RSI is currently just perched right about in the middle, and we could see a move in either direction, but my indication is that if it does go to the downside, then it will be a pretty easy trade to make. But if it does start to push to the upside, we'll also be able to easily measure some nice levels based on the fact that we do have a cluster of resistance all in one pretty close point. So we have been downtrending for a little while from the US dollar in the hourly charts, but I do believe that this is just a correction and the dollar will continue to start to see its way higher. So if I did have an opinion, I would say that I do think that we are going to break these 100 and 200 hour moving averages and are going to start to push to the upside. If we throw in a daily chart, it becomes a little bit more clear that this is just possibly just a correction. We have seen a little bit of range-bound trading in the past few days, and while it is possible that we could see a little bit lower, I do believe that the US dollar is going to continue to push back towards new highs at around 6.2 is going to be our first target for this pair. So that's what I have to say about that pair. The pound Aussie is also at a pretty nice point. This is a daily chart, and we can see that the RSI is currently getting close to oversold conditions, currently printing at 33.44, and also coupled that with the fact that we are in between the 200 and 100-day moving averages, and the 100 has just crossed the 200-day. This is going to be an extremely important point for price because we do have so many indicators that are converging into one. So this does look like a very nice buy opportunity for me. If you do want to risk it and buy the pound into strength, then this is especially going to be a good trade for you. We do have some really close risk levels. If you do place your stop below the 200, you'd probably place it around 1.5283, and that's going to be around 50 pips below. So overall your loss on the trade is around 1400, and that's your risk if you did put in a trade to the long side right now. And that's not all that much considering this is a daily chart, but I do think that we could possibly see down to the 200 and start to test that level. But since the 200 has been so straight for such a long period of time, it does look like we are going to enter into a large some type of trend. So if we do cross below the 200 and continue to move to the downside, then that'll be become a level of resistance, and I'll be updating in the next few days. But since RSI is slowly creeping into oversold conditions, I do think that we will see a rotation up, a break path past the 100, and a continuation back towards new highs in the next few months. Last pair I want to take a look at is the Euro CAD, which is kind of an interesting point right now. We're between the 100 and 200 as well on the hourly charts. And the daily charts have entered into some nice range-bound trading. So what this looks like to me is a breakout over the next few days because we've become so sort of tightened up. It's like a coiled spring. So around 1.2875 all the way up to around 1.297 is a nice little range. It's going to be pretty small, around 94 pips. So this is a relatively small range, and I do think that we could start to see some breakouts in the next few days. So if we do start to break to the upside, first level I'll be looking at is obviously the 100-day, and then I really do think that we could possibly see up to the 200 if the euro does continue to move up. The other thing that is going to be interesting is to see how the FOMC statement tomorrow affects the euro dollar, and if the euro dollar does start to push back towards the downside, then first of all, people are going to start to be making money, because I think the overall consensus is the fact that we are still short in the market. And if, however, it does start to move to the upside, which I believe it does have room left to run to the upside, but eventually we will see fresh lows, that people will start to lose a lot of money. So like I said, place your stops pretty tight. This is going to be a rough market tomorrow, and if you do catch some nice trades, then please feel free to tell us. Don't hesitate to give us a shout out on Twitter or Facebook or any of the social media sites. @SynergyFX is where you can follow us, and we'll be posting updates throughout the week. So thank you very much for watching this video, and good luck trading the markets tomorrow.